Imagine you go to the casino and the edge is actually in your favor instead of the house's favor. This is exactly how prop firm trading works. It's mind-boggling and I can't believe that nobody's talking about this. Today we're going to dig deeper into the maths behind prop firms and how you can idealize or improve your trading approach to capitalize more of this given edge of prop firms. So this is a website that I wrote actually a year ago, so this video is long overdue, that simulates the trading of prop firm challenges with certain parameters, with certain win rates, risk to reward, but we're gonna go through it from the top to bottom. And this is the end result, what we are interested in. I put in some data for a 100K challenge with no edge here. As you can see, it's simulated per phase, no edge, and we still pay out money. This is the return on average of paid out money after profit split and everything applied per trade in the long run. So first we have two modes. Today we are only interested in the funding challenge mode. Here you could simulate how you would compound your account if you would have a personal account, but we are all about challenges today, so we're gonna stick with that. So we have the initial balance, is just the account size in general. Here is the edge that we can put in, your actual trading data. We're gonna keep it dead simple here. We're just gonna have a 50-50 break-even system. Full wins, 50%, full wins, average risk to reward 1. No break-evens, no partial wins, just win or loss, 1-to-1 break-even system. And this is just for the forecast in terms of time, how many trades on average you take per month and how far the forecast should be in terms of months. Then we have obviously the challenge fee. The cost for the Fivers 100K account right now is at 545. Then we have the profit split of 80% is also true to Fivers. And the refund rate if you pass phase 2 and get funded is 100%. So you get the whole fee back. So next up are the phase settings. So we have a phase 1 and phase 2. So these are enabled. And on both phases, we risk 2%. We have in the simplified example, first to explain the math, 0 commissions per trade. We're going to put more realistic numbers there later. And we have a profit goal of 10 in the first phase, drawdown limit 10. So a risk to reward of 1-to-1. And phase 2, we have only a profit goal of 5%, while we still have 10% of drawdown available. So we have a risk to reward of the whole phase of only 0.5. And the funded phase settings, let's say we treat it like another phase 2, okay? We're gonna keep it at 2% risk per trade. And also we're gonna pay out once we reach 5% target. So let's recap. We have no commissions in that simplified example. We have a 1-to-1 risk to reward, 50% win rate, break-even strategy. And the insane thing is just if we calculate this, if we simulate, this simulates 100,000 challenge iterations. Iteration means from challenge phase 1 start until you lose wherever you are. Until you lose phase 1 account, phase 2 fails, you have 100 payouts and then you lose the funded account. It's one iteration is basically until you lose the account in whichever phase you are. So this 100,000 of those iterations are simulated here within less than 100 milliseconds. Pretty neat. So the result here is always more or less $50 per iteration that you actually, $50 per taken trade. Doesn't matter if it's the first trade under consideration of your first challenge, it averaged out to a payout of $50. And this is just insane while being break even, insane. So let's dive deeper into how we get actually to that number. How is that even possible? And how are these prop firms still make money, even though this is the case? Like, where's the catch, right? So let's break it down. What is actually happening here? What is getting calculated? How do we end up with this number here? And how do you know that this random guy talking to his camera is not full of, right? So the math behind it is actually just like 7th grader niveau. It's not that complicated. So let's dissect it so you can understand it. So where the money comes from is basically the success rate, okay? So the success rate basically says how often when you buy a challenge and trade this break-even system, how often will you get at least one payout? Not exactly one, but actually at least one. So this is 22%. And how do we get to that? We simply look at the probabilities of you passing the different phases and multiply that out. So in phase 1 is dead simple, right? We have 10% drawdown, we have 10% profit target. We're gonna have a 50% win rate of that first phase, okay? The second phase and the funded account, because we are only having half the target, but still the full drawdown, the likelihood simply changes to 2/3, okay? And if you multiply that out, you simply get the success rate until for how often you will pay out these 5%. So we can use this probability here to make a simple calculation, and then you can already see how there is a huge edge, right? So let's say on average, let's round this down to 20, okay? So let's say on average we need 5 challenges to get one 5% payout, okay? So 5% of 100,000 is 5,000. 80 is the profit split, 80%. So we pay out 4,000 every 5th time here on average. So we can simply take these 4,000 and subtract 5 times the challenge fee, right? 545, and actually add back 545, okay? Because once, at least once, this can be even more often, but let's say the worst example, the most unlucky scenario, we only get once into the funded phase, so we only get one time the feedback. So this ends up being a profit of 1,820, right? We're just breaking a trade-even system. We are trading a break-even system, and on average, every 5th challenge, we make $1,820 of profit. So how do we get from that 1,820 profit per 5 challenges to this number? Well, the script just, or the website just calculates how many trades on average you need to get to the payouts. So this is here until the first payout. On average with these settings, you need 48 of those trades. So this just gets basically the overall payouts, the overall profit gets divided by the trades taken to reach it. So ladies and gentlemen, this is just a result of how we approach this challenge. So how can we influence that? We can actually play with these numbers. So first of all, we're gonna make this a little more realistic, okay? Because we actually only have an 8% target. So this is increasing our edge here, okay? But we also have to account for some commissions. Let's just work here for simplicity's sake with $50 per trade, okay? This is the equivalent of 16 pip stop loss on average. So this would be the commissions for always trading with an average stop of 16%, so 16 pips, which is quite a day tradey. So if you would swing trade, that would be even lower and less commissions. So let's calculate again. Okay, so now because of the commissions, we have a slightly negative edge, and this is bringing this number obviously down, but it's still profitable, okay? But what can we do to get this number up again and higher up than it was before, higher than the 50? If you imagine your account balances being this pendulum swinging between drawdown limit and profit target, is you just want to make this pendulum swing more violent or more consistently in one direction to just fast forward the outcome, okay? Because let's say in this example, we can't influence our edge. We're just trading this break-even system stubbornly without thinking. And we also cannot obviously influence the challenge conditions. So the only thing that we can influence is how fast that pendulum moves to make it hit either the one side or the other as quickly as possible to fast forward the whole process and getting to payouts quicker. So the first obvious thing that we can do here is increase the risk, but we can't because we are already having the optimum here of 2%. If we go higher, prop firms are likely to not pay you out because they're gonna see you as gamblers. So going higher than 2%, while it would work, I'm gonna show you. Obviously it's gonna speed up the pendulum, so to speak, right? It would increase the payout amount quite significantly, but we can't do that. So let's revert that and let's influence the other thing that we can easily influence without introducing an edge, without doing any magic. Let's say we go from a 50% win rate, 1 risk to reward, to 25% win rate, 3 risks to reward, okay? This is still break even because you would make 3R in one lucky trade and then in the next 3 trades you lose 1R, so break even system 25%, 3 average risk to reward, okay? Still break even system, you're gonna see it here in the edge, okay? But what is gonna happen now? Boom, we more than tripled our return per trade by still having this tiny negative edge, by simply speeding up the process. Okay, now we only need, instead of 41 trades to get to the first payout on average, we only need 13, because we make the pendulum more likely to swing towards the drawdown target, because it's so easy to have 5 losers in a row with this 25% win rate strategy. And if you have that big winner, that is also a huge jump into the other direction. So this is just speeding up the process, therefore getting that return per trade up. So obviously we can stretch this even further. We can play with for risk to reward, 20% win rate, still break even system. And we're gonna increase this number even more. Okay guys, so what is the catch here? Okay, the catch is this number, guys. Pay attention to this number and how it changes, okay? It's mostly gonna be below 2,000 or below 3,000, but sometimes you're gonna have these insane drawdowns, because this is just a very small percentage, right? It promotes long losing streaks. It's just that variance in initial drawdown, that is the catch. But the purpose of this video is not to tell you, hey, don't learn trading, just trade prop firms with a break-even system. The main takeaway of this video, guys, is first of all, calm down. Losing a challenge is not the end of the world, okay? It should not be the end of the world. If it is for you, you are sizing up too big. You have to buy a smaller challenge. A challenge must not hurt you financially. You have to truly be able to afford challenges to maximize their potential. Okay, guys, so size down. If a challenge or losing it is terrifying you, size down. But the challenges that you can actually easily afford, trade them aggressively. If you're confident that you have some sort of edge, and maybe you have it in backtesting, but you still have issues converting that into live markets. If you're confident that you're at least be able to trade this break evenly, be bold, okay? Risk 2%. Only on the challenges, this is the caveat, that you can truly afford losing without it hurting you. Because once you get that snowball started, you're gonna get more confident in your system. You can apply your edge more easily, and you're just gonna get, you know, into that happy space where you can actually rebuy challenges from the profits that you made easily. And that's how you can accumulate challenge capital, you know, virtual capital, and just make a living out of this, right? And so this is the main important thing to take away here, is not to trade a break-even system, trade like a donkey with this fixed break-even system. It's just calm down. You have a natural edge here. It's like literally you go to the casino and the house is the losing one in the long term. One other thing that I want you to encourage to do is buy the right challenges, and I mean from the right prop firms. Look at the Fivers. They have 4.9 stars on Trustpilot. FTMO 4.8 stars, okay? Because this is all just worth nothing if the firm in the end doesn't pay you out, right? So stick with the firms that have their time in the markets, right? FTMO, I think since 2015, Fiverr since 2016, excellent ratings over all these years. So because another thing is, the fee that you pay is not too crucial for that edge that I showed you. Let's say you're buying a challenge super cheap, $300, right, from one of these scam companies, and in the end you don't get payout. Of course you have a little bit of a bigger profit here, but you can even buy the most expensive challenge, let's say 800. This is ridiculous. It's way more expensive than FTMO even. You still have a significant edge. So yeah, it contributes to the initial drawdown period. Okay, I get that, but you should start with something that you can truly afford in the first place. So please don't save too much on the challenge fees. Rather pay from trusted prop firms that are actually gonna pay you out. One thing I don't want you to take away from this video is that higher risk to reward is always better. Yes, while it is mathematically better here in this break-even scenario where we can blindly enter trade, therefore having infinite trading opportunities, in the real world with my system, if I get my risk to reward up, I also lose a lot of trading opportunities because I get missed a lot of the times. And so please don't confuse that. It's not what I mean, like always risk to reward, higher is better. You have to find a balance between trade frequency and risk to reward, and this is a relationship. You know, if you want to add risk to reward, your frequency goes down. So in the real world, this cancels out. So please don't confuse that. Before I forget to mention, I also want to invite you to actually use this website. It's publicly available under tradesim.tiny with 2i.site. I'm also gonna post a link into the video description and in a pinned comment. And just plug in your own numbers, plug in your own edge and your own challenge data of whatever prop firm you use, and just play around with it. Play with the parameters, and yeah, this providing a lot of insight into your own personal situation. So make use of them. My personal takeaway of this is how profitable prop firms actually are. And I was stupid last year. I was buying a lot of challenges and traded them all combined. I put like all my eggs into one basket, invested big, and then all the psychology was kicking in because I was risking too much of my capital, of my personal income into one conglomerate of different challenges. So my takeaway here is, look, I have 53% win rate, 1.8 average risk to reward. Let's plug this in. 53, 1.8. So I do actually have a quite a solid edge after commissions. My commissions are, I would say, in that realm too, with swap fees. Commissions are lower, but swap fees are there. This is what I can pay out with my edge, and I just did not last year because I bought a lot of challenges. Then I had a little bit of a losing streak, and I was sizing down risk from 1%. First of all, I started with 1%. Then I sized down to 0.5% after a losing streak. Losing streaks just happen no matter how good you trade. So I had a nice winning streak with low risk and then I was like, okay, I made some changes, they worked now, so I'm gonna go back to 1%, and I had the next losing streak. And then I sized down again because my challenges were in drawdown, and so then I had the next winning streak. So it was quite insane actually. And what did I end up with? I was just so up my psychology because I put so much of my personal capital into one conglomerate of challenges and just played with the risk all the time, changing the risk, man. Losing streak, turn it down, then you have the winning streak that basically equals out the distribution, but you didn't capitalize at all because you turned the risk down. It was like this rabbit wheel of just not understanding the edge of prop firms. And now I have all these challenges that are still in drawdown, even though in terms of R, I was actually profitable just by playing around with my risk all the time. It was such a pitfall, man, and such a devil's circle, right? So personal takeaway is one challenge at a time, 2% risk, just let it play out. Doesn't matter if it loses, just buy a new one. Make sure that it doesn't hurt you, and just be bold, man. These prop firms, even especially when you actually do have an edge, they make you money. Okay, prop firms are profitable because most people actually have a negative edge. They don't even manage to be break even. This is why this is great for disciplined traders, and well, bad for the people that cannot trade at all. That think it's easy to make a quick buck. It is not. But yeah, for us traders, actually trading a system, having an edge, it's so powerful. Capitalize on this. Use this. Well, guys, I could do 2 hours more of philosophing about this, but my biggest weakness is keeping things short, so I'm gonna cut it here. Thank you thank you so much, guys, for your attention. My English still sucks, man. Jesus Christ, but I'm gonna get better. Okay, don't worry. And yeah, thanks for your attention. I hope you learned something from this. And obviously I appreciate your feedback if you have any, and just see you in the next one, guys. Take care.